Your intel on the Philippine markets and the economy. In the headlines, the Philippines' second quarter gross domestic product data are out in the next hour. Analysts from the Business World poll expect a median GDP of 2.8%. JP Rivera, Senior Research Fellow at the Philippine Institute for Development Studies, joins us live. The country's agricultural sector posted slower growth in the second quarter. And Meralco is upgrading its older metering system as part of efforts to reduce system losses and improve monitoring of electricity delivered across its distribution network. The Philippine Statistics Authority releases its second quarter GDP report at 10 a.m. Philippine time. A Business World poll of 21 economists and analysts show a median forecast of 2.8% GDP growth for Q2. They cite elevated inflation, weaker household spending, soft business confidence, and slower public infrastructure spending. If realized, this would match first quarter growth, but slower than the 5.4% expansion a year ago. First half GDP growth would also average 2.8%, which is below the government's 3.5% to 4.5% full year target. Meantime, the PSA kept first quarter GDP growth at 2.8%, but revised gross national income growth down to 2.9% from 3%. It also lowered its estimate for net primary income from abroad to 3.5% from 4.5%. The PSA also revised several industry estimates, lowering growth for other services, utilities, and education, while raising estimates for manufacturing, transportation, and retail trade. The agency said such revisions are part of the standard national accounts process. Meanwhile, agriculture grew 2.9% in the second quarter. That's lower than the 6% posted a year ago, but a reversal from the first quarter's contraction of 0.3%. The Agriculture Department says better output across all subsectors helped drive the improvement. It added that farm modernization is strengthening the sector ahead of the expected weather challenges later this year. Philippines' real GDP expanded by 2.8% in Q1 2026, down from 5.4% in Q1 2025 and 3% in Q4 2025. That is well below the government's 5 to 6% target range. Second quarter GDP would reveal the impact of the full transmission of the Middle East conflict. This coming on top of slowed public and private infrastructure spending, resulting from the flood control corruption scandal. Well, with us now for his insights, JP Rivera, Senior Research Fellow at the Philippine Institute for Development Studies. It's good seeing you again, JP.
Hi, good
Welcome
morning, Cathy.
back
Thank you for
to
having
the
me
program. Yeah, 6 weeks ago, you were here on this program, slashing the full year GDP forecast from 5.3% to 4%. And you cited several factors there: credibility and systemic risks, oil shocks, and political spectacles. So how do you think Q2 would look like in the next hour when the official result is released?
Well, based on the initial estimates that we had, we're forecasting the second quarter GDP to be around 3%, which would allow us to have still a full year GDP growth of close to 4%, assuming that the economic fundamentals for the third and fourth quarter would remain to be strong and the economy would be very responsive now to the improvements in the global situation and more policy certainty that we have, since the second half of the year is now very interesting given that holidays are coming again and we are expecting improvements in the government spending as well as consumption given the more manageable inflation now.
Assuming the fundamentals are strong. That's for the second half. But what exactly happened in the first half with the insights you've shared over the past 6 weeks? There's systemic and credibility crisis. I mean, have we moved the needle on that 6 weeks on?
Okay. Well, 6 weeks after our last conversation, I think we have to ask a different kind of question so that we can look at the economy in a different way. Because in the first half of the year, we're asking how can we grow the economy further so as we can also sustain the upper middle income country status. But given the recent developments on inflation and unemployment, I mean, these figures were released this week, I guess we also have to ask now the question about the quality of growth that we're trying to achieve. Because in talking about the quality of growth, we're not just talking about expansion, we're also talking about how can we generate quality jobs? How can we make sure that there is manageable inflation? How can we make sure that food is actually priced in such a way that the Filipino people would be able to afford it?
Let's pick up on inflation because it seems like it's decelerating. Yes, there's still a rise in prices, although a little bit more slower. Isn't that manageable enough? Aren't we taking, at least from the central bank's point of view, that they're getting a hold of inflation, even as it still remained above the ceiling?
Well, I would like to look at it this way. Yes, the BSP is actually reaping the effects of its monetary policy, but I would also like to see this as the economy actually being responsive to certain improvements that we have in the agriculture, manufacturing, and services sector. And the response of the economy is, it may not yet be well within the target, but it is actually making improvements that we have to sustain. So again, other than the question of quality growth, it is also a question of whether the improvements can be sustained in the third and fourth quarter.
And to protect purchasing power, which was already a problem 6 weeks ago, and you were very definitive about this. How much work has the government done in protecting that? And also to ensure that those in the poor category hadn't yet entered the new poor?
Well, government has been working in terms of providing social protection as well as managing macroeconomic fundamentals. So that it's both at the end of the spectrum wherein there's a policy component and the immediate relief being given by government just to tread, not just for our fellow Filipinos, to tread the relatively higher prices. That's why improvements can be seen, but then sustaining it is a different story.
It is, because when you talk about ayuda, and that's where all the monies are gone in, and that is also the guidance that we get from the State of the Nation address of the President. How much further can growth go with so much ayuda still being given out, which could have been used for the infrastructure projects that you've been waiting for, the multiplier effects that would precede the kind of growth that you foresee in the second half?
But we also have to understand that this ayuda component is to simply address the immediate relief that our kababayans are actually demanding. That's why, but it has to be complemented with two things. Number one, the ayuda system should have an escape system wherein, or it is not permanent. There should be an exit strategy for government for this ayuda system not to persist for an extended period of time, I mean, as aligned with our fiscal consolidation processes, but it also has to be accompanied by structural reforms. Because the point of the ayuda is to manage the consumption, to ensure that consumption would continue to drive the economy. But given the situation domestically and internationally, we see that consumption is not the only way to drive growth. And we cannot fully rely on consumption to drive economic growth for the next quarters. That's why we have to look at it also from an investment-driven growth. Consumption has to be complemented by government investments in higher productivity, better education, better institutions, better healthcare services, better social protection, so that this consumption can be fueled further.
Well, let me connect the dots now that you made a mention about jobs that needed more pumping up. And in the words of Marco Antonio Agonia, I just had him about 48 hours ago before the jobs data came out. He's from UANP. He was very definitive about looking for the strongest drivers, and he is looking for that in higher value jobs. That would create that productivity growth needed for the kind of growth that we want to sustain ourselves in UMIC. So how then do you connect the dots? Because our unemployment rate has shown a bit of a bump up over the last 24 hours, even though underemployment went down a bit.
Well, that has a starting point. No? The starting point of that investment in infrastructure, in education, would have to begin with human capital. So if we have a productive workforce, because government and private sector do invest in healthcare, in education, then we would have productive Filipino workers that will contribute not only for their own personal productivity, but also to firm productivity. When firms becomes productive, then they would be able to contribute more to production, to their contribution to manufacturing, to the different sectors of the economy. And that investment in human capital will now funnel into greater consumption for those who are actually working. It's a cycle.
It is a cycle, but then, of course, the private sector takes its cue from the government, and we've been looking at that data on public infrastructure spending. That hasn't really improved, giving really less impetus for private spending to go up.
Yeah, because of that issue, because I mean, with all the checks and balances in the infrastructure sector, that's why we're arguing that investments may not only go into infrastructure. Investments may also come in the form of human capital, education, healthcare. And if investments are done on that sector, then we're actually reinforcing the other side of the economy, which is the people. And this human capital, the human resources that we have, the better skilled Filipinos that we have, can now stimulate better growth, not only through consumption, but also through investments and through their own contribution in the economy.
Right. I see it now that the leapfrogging has to happen from a consumer-driven economy to investment-led. But how to get there? This huge gap right in between. And if the first half would be a palette in which we can work whatever we've learned, what should the government then do in the second half to get to its targets and not revise them down again?
Yeah. Well, certain interventions must have to be done in the second half of the year. One of them would be to ensure policy credibility and policy stability. So those policies mentioned in the SONA must be able to manifest.
Such as, what would you name, like a top three?
Well,
What would be the most immediate?
The most immediate would be, for example, it was mentioned regarding the tax. However, the tax would have to be studied very well because it would have different effects on different segments of society. There will be beneficiaries, there will also be those who would be negatively affected by that. So the tax discussion would have to be put on the table, and the legislation would have to work on it within the second half of the year so that its immediate effects can manifest by fourth quarter.
Which tax then? I mean, which would you back up? Because he did mention a couple of them that involve also the MCIT and also maybe even bringing back suspension on excise taxes and fuels.
Well, that can be managed, that can be done. But again, these are reliefs that will allow the preservation of purchasing power of the Filipino people. But again, there has to be an exit strategy because the landscape will change, may change in the second, third quarter, even early next year.
So that's just preservation, but we're wanting to leapfrog. So which priority then should the government tackle in the immediate so that we can ensure that growth path that you're expecting for the second half?
Well, immediately, again, I would like to emphasize again that rebuilding this confidence of the private sector on the policies being implemented by government is a must because investments by the private sector are being done now. The decision to make an investment is being done now. And with a wait-and-see behavior of many investors right now, that has to be pacified so that they make the investment decision within the year.
It sounds like that credibility crisis is still hovering above us like a cloud. What then should be done? I mean, we're now at a period where there's the Senate impeachment trial and the flood control corruption scandal still currently being addressed. What would be favorable from a foreign investor point of view that would give them that confidence that they lost a year back?
Well, on top of improving macroeconomic fundamentals, government may also reconsider speeding up certain processes like investigations, and as what I have mentioned in previous interviews, wherein rebuilding the trust would warrant that certain issues would have to be clarified, information would have to be given to the public, to investors, so that their decision-making process would shift from a wait-and-see to a more definitive shelling out of investment, of funds towards the economy.
So that's it. I mean, that's a huge lot, and it's
It is.
not even into probably the Philippine Development Plan, we hadn't even touched that. So from the side of economic planners, what can be done beyond monetary policy tools?
Well, beyond monetary policy, and I think I have mentioned this before, that monetary policy alone cannot stimulate the growth that we have. Then we have to look at now on the fiscal behavior. There really has to be a process by which we can speed up the investment in infrastructure, the infrastructure outlay, so that the productive effects, the multiplier effects of these infrastructure would now be felt by the Filipino workers.
Okay, so you're still hanging on at 4% growth for the full year?
For the full year. I mean, I'm still optimistic about that growth, and it will be coming from different factors. Internationally, we are seeing improvements in the geopolitical situation abroad. And secondly, the holiday season is coming, and historically for previous years, while consumption is very strong in the second half of the year, it has now to be reinforced by certain policy interventions that the government can do now, like building trust and looking into other forms of investments, particularly in human capital.
And that's beyond ayuda, because that can only get us far enough.
It is beyond ayuda. It is more sustainable and can be felt in the succeeding years.
So what kind of data then would make you rethink that 4% target? Because you've already revised that down more than a full percentage point back in June.
Well, we would like to see improvements, number one, in the investment sector of the Philippines. In the FDI inflow, we want to see an increase, and that can be driven by improved trust. If we really want the short-term growth to at least accelerate, then certain improvements in trust and confidence, not only of foreign investors, but also of local investors, should manifest immediately.
Just as a final point, how then does it make sense for us to appreciate still our upper middle income status at this point? What would you tell a netizen, a viewer, and why it's still important, even as we're chasing headline growth?
Well, I must again emphasize that the upper middle income country status is a milestone achievement of the Philippines. However, we have to keep in mind that it is not the end point. It is not the end of the development journey of the Philippines. And for everyone, for the Filipino people, this is actually a rallying call for every one of us, government, private sector, local communities, media, the academe, to continue calling for accountability, for transparency, because these are easier said than done. But then these are the key for us to be able to sustain the upper middle income country status and actually move faster towards our ambition 2040.
So
it's a tall order. It is a tall
is.
order. That's
Yeah.
why I keep on emphasizing that it requires a more sophisticated approach to maintaining strong macro and microeconomic fundamentals.
Sounds like coordination that's really got to be so much stronger and closer.
It has to be. It is difficult, but
Okay.
we have to take it because our ambition is very reputable, and I know we can make it.
All right, so we're just about 22 minutes away from the data. Thank you
Thank you so much.
for your
Thank you.
insights.
Until next
Appreciate it, JP Rivera of PIDS. Check out the Philippine markets and see how they've fallen again yesterday as investors opted to stay on the sidelines ahead of the second quarter GDP release out at 10 a.m. Philippine time. PSEI shed 8 points or 0.1% to settle at 6,277. PhilStock's financial notes losses were trimmed late in the session due to bargain hunting activities. Total turnover thinned to 6.18 billion pesos, with advancers edging out decliners 97 to 96. The broader all shares index added 0.63 points or 0.02%, but the sectoral gauges a mixed bag. 10-year government bond yields ticked down to 7.24%. And the corporate stories making headlines this Friday. Century Pacific Food Inc. posted a 6% year-on-year increase in net income after tax for the first half of 2026. The growth comes amid higher fuel prices and the June 8 Mindanao earthquake that damaged CNPF's manufacturing facilities in General Santos City. Universal Robina Corp's second quarter core net income attributable to parent grew 10% to 2.9 billion pesos, lifted by its branded consumer foods and animal and nutrition health products. URC's board of directors has also approved special cash dividends of 2 pesos and 30 centavos per share payable on September 30. And Meralco is upgrading its older metering system to reduce system losses. The country's largest power distributor rolling out its elevated metering transformation system, an upgraded version of its earlier elevated metering center program. The investments come as policymakers debate on whether to scrap system losses as part of the president's agenda to lower power rates. And you're watching Money Talks. Coming up, an excerpt of my conversation with Geraldine Acuna Sunshine of Khan Academy, Philippines, on preparing students for an AI-driven future. And Port's billionaire Enrique Razon Jr. topped this year's Forbes richest list in the Philippines. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. A new law has removed the mandatory use of the spiral progression approach in the K-12 curriculum. Republic Act 12332 gives the Education Department more flexibility to choose the most effective teaching method for students. The law lapsed into effect without President Bongbong Marcos' signature. Spiral progression may still be used, but schools are no longer legally required to follow it. The law also orders a comprehensive review of the basic education curriculum every 5 years. So how can the Philippines better prepare students for an AI-driven future while addressing persistent challenges in reading, math, science, and critical thinking? Here's an excerpt of my thought leader's conversation with Geraldine Acuna Sunshine, President and CEO of Khan Academy Philippines, on the country's education priorities and the importance of expanding access to quality learning for every Filipino child.
Our platform has an AI feature called Conmigo AI, and we gave that free. We have given that free to all teachers, and in fact, DepEd has funded quite a bit of our teacher training to allow us to train teachers on how to use Conmigo AI, and really how to use the Khan Academy platform, because this tool is so powerful. It will reduce their admin time, the time they spent in not teaching, right? Which is what teachers really complain about. So this is the best of AI, where it's a productivity tool and can really help you focus on doing what you love and what you're trained to do, which is teach, versus, create lesson plans, which you can do in 2 minutes instead of 3 hours, right? So this is a Harvard study that was done, and 600 Filipino teachers responded and said that, wow, I can use Conmigo AI to cut down the time on admin so I can actually teach.
Yeah, getting pushbacks from teachers, not really knowing what the role of AI is at work. Is it sort of a supporter at the back end, or is it something that may take center stage at some point, take away their job?
No, we're not here to replace teachers' jobs, and it really shouldn't do that, right? Conmigo AI is there for teacher support, for student support. So our teacher trainings will allow teachers to understand the power of this technology. Because it's like deciding to use a flip phone when we already have smartphones, right? I mean, does anyone want to go back to a flip phone?
When you have the IT BPM industry saying that the 2028 forecasts have to come off a bit because of AI and global competition, How then, as from an educator standpoint, do you address that gap in workforce, in our ability to catch up to what is needed in the global space?
So the world of work will change. Anytime you have new disruptive technology, it's going to shift, right? Because we're also seeing what AI can do that's very powerful that maybe you needed 10 people to do before. And now you can have actually your phone do it because chat is there. There's AI at our fingertips. We're all seeing it now. So that's happening, whether we like it or not, that's happening. So the education system also has to move with that because there are going to be new jobs and new skills that are required to meet the needs of the new job.
Catch the full conversation on One News and our social media channels. Let's take a quick check on the Philippine peso and see how it's open this Friday. It is weaker, 60.90 to the dollar. The peso dropped 6.4 centavos yesterday to settle at 68.15 against the greenback. The local unit depreciated due to the dollar's strong buying pressure ahead of the release of the U.S. jobs report. Expectations of a weaker second quarter GDP also weighed on the peso. Checking in on the markets overseas, U.S. stock futures a mixed bag as investors await the country's jobs report. The Dow, the S&P 500 fall by about 0.1%, and the Nasdaq slids about 0.1%. Asian markets are also a mixed bag this Friday. South Korea's Kospi rises over 0.5%. Australia's ASX 200 slips by 0.4%, and Japan's Nikkei 225 declines by 0.6%. Wall Street fell this Thursday. The Dow broke its 5-day winning streak, down 0.8%. S&P 500 slid nearly 0.2%, and the Nasdaq shed less than 0.1%, with shares of companies like SanDisk and Western Digital falling for their failure to meet investors' lofty expectations. Meantime, a new tycoon has topped the Forbes annual list of the 50 richest in the Philippines. Sports and casino magnate Enrique Razon Jr. is this year's richest Filipino with a net worth of $21.8 billion. His listed companies include ICTSI, the first to reach a market value of 2 billion pesos, Manila Water, and Solaire operator Bloomberry Resorts. Razon unseats C siblings, heirs to the SM Group, whose fortune slid to $9.2 billion. Other tycoons who made it to the top 5 are San Miguel's Ramon Ang, Pure Gold's Lucio and Susan Go, and DMCI's Isidro Consunji and siblings. The combined wealth of tycoons in the list fell 8% to $79 billion from last year's $86 billion. And it's that time again for the year for Filipino indie cinema as the Cinemalaya Philippine Independent Film Festival officially gets underway. This year's festival features 9 full-length films, 2 short film programs, along with book launches, talkbacks, and other special events. Leading the main competition are 2 Valid IDs, starring Pokwang, and Mag-iina, featuring Janine Gutierrez, Cherry Pai Picache, Agot Isidro, and Jackie Lou Blanco. Also competing are Tirik and Kakasayawan. The lineup also includes The Hand of God, as well as Tayo Lang Ang Nakakaalam. Rounding out the competition are Status Rejected, Animal, and Gang Gang. The opening also brought together members of the main competition jury, including Dan Villegas and Sari Luch Dalena, along with international jurors. Cinemalaya runs from August 6 to 18 with screenings at select cinemas across Metro Manila. TV5 is also one of the official media partners of this year's film festival. That is it for Money Talks. I'm Cathy Yang. Catch us again Monday at 9 a.m. right here on One News. Kapatid, we are One News, your side all the time. We'll leave you now with One News Station ID. Have a great weekend ahead. I'll see you Monday.